welcome to my channel. Now we take in our discussion section number 143. Section number 143 is about powers and duties of an auditor. Firstly, one case study we discuss here. The name of the case study is Newton versus Birmingham. This case study says that by passing a resolution in general meeting or by amend the article of association, the company cannot restrict the powers of the auditor. Okay, so this is the case. I think this case is of 1895. Okay, so the auditor have such duties, and for completion of those duties the act give the auditor such powers. Okay, and article by amending the article in passing resolution in general meeting, the members cannot restrict the power of the member, or even though we can say management cannot restrict the power of the auditor. Okay, firstly, we discuss about section 143 subsection 1. Section 143 subsection 1 says that auditor should inquire. Auditor should inquire some information, and if he found that this information is not in agreement with the books of accounts or returns and is not properly disclosed, then only auditor report those information. Okay, in 143 subsection 1 auditor inquire those information, and in 143 subsection 3 auditor report such information. Even though the information is correct or incorrect, you should report. Okay, so in 143.1, what as an auditor we report? There is a memory trick ABCDEF. A for advance loans and advances, B for the book entries, C for companies other than investment and banking, D for deposits, E for expenses, personal expenses, F for allotment for cash. Okay, first is advance and loan. Such advance and loans are secured if secured, then the security is properly secured or not, the terms of the security is as per agreed and proper or not. This whole thing is inquired from the auditor. Then in second B, such entries which is such transactions which is shown merely by book entries, the transaction is actually not incurred, fictitious entries we can say. Okay, so as an auditor we should inquire that there is no any fictitious entries. Then C for companies other than investment and banking companies, any companies which consist the assets having more shares, more securities, more debentures, and as an auditor we should inquire that this asset is not sold less than the cost. Okay, as an auditor we should inquire about this. Then E about personal expenses. Personal expenses of the officers, managers is not charged by the revenue account. Okay, you should inquire as an auditor. Then finally F for the allotments for cash. Such allotment for cash, and the cash is received also, and as an auditor we should check the balance sheet, we should check the other accounts, what the effect on those accounts. Okay, so as an auditor we should inquire, and if we found any adverse transaction, any transaction which have adverse effect on the financial statement, then only we report those transactions. Okay, but we should inquire, it's our duty in 143.1. Then 143.2 is about simply says that as an auditor you should make your report, you should comply with the accounting standard, auditing standard and other acts. Okay, and we give true and fair view on the financial statement if this all is properly followed by the entity. Okay, and financial statement is properly books of accounts is properly maintained and financial statement properly present. This all is 153 subsection 2. Okay, this is not much important. Then 143 subsection 3 is most important. 143 subsection 3 where the reporting requirement. As an auditor we report. First there is 10 points. Okay, and the point is in clauses A, B, C, D, E, F, G, H, I or J. And this all clauses are most important. So I give a memory trick for remembering these clauses. First A for all information. First We understand AA for as an auditor, we should report that all the information and explanations, all the information which is required to conduct our audit, we should obtain. We already obtain. Okay. Then in B, books of accounts and returns from branches as an auditor. As an auditor, we should report that all the books of accounts are prepared and are properly prepared, and the branches which is not visited by the auditor, the branch return is also proper. We check the branch return, the branch return is also proper, those branches which is not visited by the auditor. Okay. Then C is about the branch report. Sometimes the company auditor is not the branch auditor, so wherever the company auditor is not the branch auditor, then the company auditor type the report of the branch auditor. Okay. And how we deal with the report of the branch auditor, we should report in this, how we deal with this report, we should report this matter, okay, in our report. Then D is about balance sheet and P&L is in agreement with the books of accounts and returns. Okay. Then E is about the comply the accounting standards. This financial statement is comply with all accounting standards. Then F for the any financial transactions which give adverse effect on the financial position, then you should report on those transactions. Then finally G about the G, wherever director is disqualified in 164 subsection 2. What 164 subsection 2? Where the vacation after the appointment of the director sorry, where the director is not filing the annual return or financial statement to ROC continues 3 financial years, or even though not pay the due deposit or due interest for 1 year, then all the director vacate their office. Okay, in 164 subsection 2. So as an auditor, we should report in our we should state in our report the matter whether any director is disqualified in 164 subsection 2 or not. Okay. Then H is about the qualification, reservation and adverse remark relating to the maintenance of accounts. Any qualification or reservation about the maintenance of the accounts, then we should report in clause number H. Then I is about the internal financial control. This clause, I clause, is amended by notification dated 5th June 2015, which is further amended by notification 30th June 2017. And this notification says that the internal financial control should not report by the auditor if the company is a OPC, small company, or even though a private company which have the turnover less than 50 crore, or borrowings from the financial institutions and bank is less than 25 crores. Less than 25, that means 24 crores, or less than 50, that means 49, or less than 49. Okay, then we are not bound to report that internal controls are effective or not, operating effectively or not. Okay. So small company which is covered in the definition of small company under section 2 clause 85, and OPC which is covered under the definition of one person company section 2 clause 69. So this other than this companies, as an auditor we should report the internal financial control. Okay, this is the point number clause number I. Then last clause number J, where other information should be rule 11. In rule 11, other information should be reported by the auditor. For example, there is any pending case laws, accounting standards, any amount which is which should be transferred in IEPF and which is still not transferred. This type of information you should report in this clause number J. This all is the clause. How we remember this clause, because some clause is very important, like clause number G is very important, where we should report the director is disqualify or not. Okay, so I give a memory trick. A for all information is taken by the auditor for conduct the audit. Then B and C for branches. B for the branch return and C for the branch report. We should report in our we should report the state that the branch returns are proper or not, and how we deal with the branch report in C. So B and C for branches. Okay. Then D for the D. In D point we deal with the books of accounts. We deal with the balance sheet P&L is in agreement with the books of accounts and return or not. So this is D. E for the standard, accounting standard is follow or not. F for the financial transactions which give the adverse effect on our financial statement, financial position. Then this F is financial transaction. G for the G64 AG cat, you know what, aircraft, one engine aircraft which is for the agriculture purpose. So we can remember G164 AG cat. Okay, this is the G where disqualification of the directors is reported by the auditor if directors are disqualified in 164 subsection 2. Okay, then H for adverse. Adverse, any transaction which is adverse, adverse or maintenance of books of accounts, any qualification, reservation and adverse remark relating to the maintenance of books of accounts, then you should report in H. Then I for IFS, that means internal financial control, so I for IFS. Then J for other rules. Finally J for other rules, rule 11, other information, rule 11. It's not much important. Okay. Then we discuss one more section, 143 subsection 4, where simply if any qualification in reservation is see by the auditor, well, report on financial statement, then you should write the reasons why you give the adverse report, why you give the negative report, what is the qualification, what is the reasons of the qualification. Okay, this is simply 143 subsection 4. This is also not much important. The most important is 143 subsection 1 and 143 subsection 4. 143 subsection 1 is about the A for advance loans, B for merely book entries, C for the companies other than the investment banking companies where shares etc. Their shares etc. is less than cost, sold less than cost. D for the loans and advances show as deposits. E for the personal expenses charged from revenue account, and F for the allotment of shares for cash. Okay, this all about 140 subsection 1, 2, 3 and 4. Okay, 143 subsection 1, 2, 3 and 4 we discuss in this lecture. Thank you very much.